we don't live under a rock. And so we certainly know and are aware of the posts that are on Nextdoor Heritage Eagle Bend. We see those as being in three major areas. The most concerning to us is the fear that has been raised about our IRS exposure and our tax liabilities. We have read, either directly or inferred, that we haven't filed tax reports. We have been directly or inferred that we filed fraudulent tax reports. And so I've asked Bob to go through a very detailed, clear-cut answer to those concerns. Bob, would you help me with that?
Prepare to be dazzled. At no time during the next 10 minutes will my hands ever leave my wrist. This is not nearly as exciting as talking about the magic of double entry bookkeeping, but I'm going to give it my best shot. This is dry stuff, folks. And if you're with me by the time I get through all of this, you get a beer. First of all, there has been an incredible amount of misinformation, inferences. It's just unbelievable to read what has been dispensed that has set about half of this community's hair on fire. So let me start this way. In general, Heritage Eagle Bend Master Association is current and in total compliance with regard to its federal and state tax filings, period. Second, as disclosed in the audited financial statements for each year, let me ask, how many of you are aware that the audited financial statements are on the website? How many of you have read them? How many of you profess to understand them? Okay. But as disclosed in the footnote to those financial statements, Heritage Eagle Bend Master Association had no uncertain tax positions, and the current controversy notwithstanding, still has none. 3. Years 2014, 15, and 16 are open for federal examination. The Master Association has never been audited by the IRS, and no notice has been received that an examination is imminent. That could change. Now I want to focus on the 2016 federal and prior federal income tax returns. And here's where it gets a little tricky, because somebody asked Perk before, are we a not-for-profit? And the answer was yes and no. For income tax purposes, Heritage Eagle Bend's total income in 2016, as reported on Form 1120, and some of you say, wait a minute, 1120, I'll come back to that, was approximately $6.9 million. And that excludes the assessment for the reserve fund, which is not subject to taxation by law. The Master Association files Form 1120, the same form as a C or for-profit corporation, and that's because approximately 50% of our revenues are unrelated business income generated from golf, food and beverage, and contract services for landscaping and snow removal. That's considered unrelated to an operation of an HOA. We happen to be an HOA with a golf course and a food and beverage operation. Generates about half our revenues. And by virtue of having those activities, that throws a portion of our tax return into as if taxed as a regular C corporation. And this income, and this is a distinction to keep in mind as I go along, this income is classified on the tax return as non-membership income. In contrast, the assessments for both operating purposes, that $168 presently per month, and for the capital improvement fund, presently $10 per month, are classified as membership income. And the main distinction there is everyone has to pay $168 and $10 a month without exception. Not everyone has to play golf here. Not everyone has to eat in the restaurant. Both of those are open to the public. A significant portion of our revenues in those two areas are generated by people who do not live in the community and are not members. However, people who live outside this community don't have to pay the assessments. Everybody in this room does, and that makes it membership income. So we have membership income, non-membership income. Now, the expenses and the deductions are then allocated between the two categories of income, for the most part based on head count. This is an inexact science at best, since nearly all of the staff at the Heritage Eagle Bend support both membership and non-membership activities as part of their daily, weekly, or seasonal routines. The allocation of expenses and deductions on the tax return include depreciation expense. Now that's an expense we don't see in our monthly financial statements because it's a non-cash charge. We keep track of cash expenses. However, on the 2016 tax return, we deducted $564,000 in depreciation expense. And that was split $312,000 to non-membership income, $252,000 to membership income. The deductions for depreciation obviously and greatly affect the amount of non-membership income subject to regular taxation and the amount of membership income subject to the provisions of Revenue Ruling 70-604. More on that. Non-membership income. This, I think, will be a big surprise to you folks. Master Association incurred losses on its non-membership income each year through 2013, when the net operating loss carry forward available to offset taxable non-membership income reached approximately $1.9 million. During the years 14, 15, and 16, taxable non-membership income totaled $1,357,000, all of which was offset by utilization of the net operating loss carried forward. Approximately $518,000 of the net operating loss income remains to offset future taxable non-membership income. The taxes avoided, not evaded, avoided during 14 to 16 on non-membership income, over $500,000. That money was not spent on taxes. And it could be argued that a sizable portion of this income was used to fund the $930,000 in permanent transfers from operating cash to the reserve fund, $180,000 in 2015, and $750,000 last year. Those funds, it can be argued, came from previously taxed or income subject to tax on the non-membership income. These transfers, and this is important, these transfers were made in accordance with applicable Colorado statutes, approved at regular meetings of the Board of Directors, and are documented in the minutes of the respective board meetings. All of this information is posted on the resident side of the website. That is as transparent as we can be. In addition, Outside legal counsel also confirmed that the transfers were also made in accordance with our CCRs and Colorado statute. And our outside auditor, who also prepares and signs our tax returns, was also aware of the transfers and took no exception to them in the course of auditing our financial statements and preparations of our tax returns for 15 and 16. He prepares them and therefore must sign them. His professional reputation is on the line. He would not sign anything that was incorrect, fraudulent, or incomplete. Let's talk about membership income, 70-604. Membership income is not subject to taxation upon filing the return. Only the non-membership income is subject to taxation, and as I just said, every dollar over the last 3 years has been offset by utilization of a net operating loss carry forward, resulting in zero taxes. The tax treatment of the membership income or loss is the same as if this portion of the tax return was filed on Form 1120H, which is the form used by the Traditions and Villages sub-associations. Those two sub-associations have no unrelated business income. The golf course belongs to the master. Each year, and this is really important because more than anything, as much as anything, this really grinds me. Each year in the return, as part of the return, there is an attachment to the return that computes the amount of the cumulative net excess or deficiency of revenues, either over or under expenses. The hysteria says we're hiding this from the IRS. No, it's part of the return. The IRS sees it as part of looking at the return. I'm not hiding anything. This amount on the return is called the net membership income carry forward, or for simplicity, the 70-604 calculation. Thus, the IRS is informed each year as to the amount of the excess income generated to date that is carried forward to the following year. It's part of the return. Each year since 2010 is as follows. Looks like I'm losing some folks here. It's okay, it's okay. I haven't lost anybody yet. I mean, I can see you're all staying. At the end of 2010, per the tax return we filed, there was $177,000 deficiency of revenues over expenses. And that was not surprising because the Master Association had only $267,000 of available cash to meet operating needs as of the end of December 2010. The assessment for that year was $146, but there was grave concern that the Master Association would not be able to meet its operating expenses in the ordinary course of the business. And the board at that time was justifiably panicked. What did they do? The assessment for operations in 2011 was increased to $178 a month, plus another special assessment of $31 per month to replenish operating cash, or a total assessment for operations of $209 per month in 2011 from $146. This special assessment alone, that $31, added over $500,000 to the cash coffers and to the cumulative excess over revenues over expenses as reported in the tax return for that year. Net effect on 70-604, we went from a deficiency at the end of 2010 of $177,000 to an excess of $738,000. Did that raise a red flag with the IRS? No, it did not. 2012, assessments for operations, $173 a month per tax return, cumulative excess, $1,158,000. Did that raise a red flag with the IRS? No, it did not. 2013, assessment for operations, $178 a month, including approximately $10 a month for capital improvement fund and the contingency fund. One was $5 and change, the other's $4 and change. And that assessment for the contingency fund was only done in 2013. Both of these sources of income are subject to Revenue Ruling 70-604, and therefore contributed to the growing excess of revenues over expenses as reported on the tax return. Did the IRS take concern over that? No. Now we come to 2014. Assessments for operations, $168 a month. Contribution to capital improvement fund, $15 a month. Cumulative excess, $1,670,000. Did the IRS seem concerned? No. 2015, assessments, $168. Assessment for the capital improvement fund, $15. Cumulative assessment, $1,150,000. It dropped by $520,000. What happened? We kept the assessment for operations at $168. Costs began to catch up. 2016, assessments, $168. Contribution to capital improvement fund, $15 a month. Per the tax return, $700,000 cumulative excess. Since the assessment for the capital fund began in 2013, this part of the total assessment for Master Association has added $864,000 to the Revenue Ruling 70-604 calculation. Take away the assessment for the capital improvement fund, there is no Rev Ruling 70-604 consideration to be addressed. There would be a deficiency, as a matter of fact, as existed at the end of 2010. Bottom line, if questioned by the IRS as a result of an audit, we can easily demonstrate that the cumulative excess of revenue over expenses as of December 31/16 is almost totally due to the assessments collected for the capital improvement fund, not operations. Why are we addressing Rev Ruling 70-604 in 2017? Several reasons. We continue to generate an excess over revenue over expenses, otherwise known as net income, and that's due to the very professional management of OB Sports. This results in the continued accumulation of operating cash in excess of our operating needs. Every month in that newsletter, there's a table that's been there for nearly a year now that shows the change in our fund balances between the beginning of the year and year to date, and what caused it to change. I call it a capsule cash flow statement, but there's enough information there for the resident can see what are the balances by fund, and also, as important as anything, there is no commingling. There is no movement of funds as if this were a Bronx shell game. These funds are distinct, they are not commingled. We're going to come back to that. Third, there is no longer a need to make transfers to our contingency and reserve funds. Contingency fund is fully funded, and the reserve fund stands on its own, as does the capital improvement fund. As I said throughout the evening, not a dime from operating cash will be contributed toward this repurposing project. It stands on its own going forward. The board board has concluded that these circumstances warrant a reduction in the monthly assessment for operations in 2018, and that will be finalized over the next week or so as we move into the presentation to delegates and to the community in early October. Hence, the provisions of Revenue Ruling 70-604 are being followed with regard to the excess of revenues expected to be generated in 2017 that will result in a reduction of the operations component, that present 168 of the 2018 monthly assessment. You will know soon enough how much of that reduction is, but that's the third question, because that's subject to the resolution. There are 4 ballot questions. Do the repurposing or not? Yes or no?
Yeah.
We want to do it by taking out a secured bank facility. Shall that facility be secured by an assignment of a collection of future assessments? Yes or no?
Yes.
Third, should the resolution that will return a portion that, let's say, let me back up, because be careful, because we haven't finalized the wording yet. Should the 2018 assessment for operations be reduced by the amount of the forecasted excess of revenues over expenses in 2017, yes or no? That's interesting, because we're putting the budget together on the basis that the membership through their delegates will say yes. But you can see that that affects the assessment for 18. The answer to that question is yes or no. And then 4, as a result of the votes on the first 3 ballot questions, should this budget be approved. In conclusion, that's an applause line. I hope this was helpful and will enable you to better understand the situation when contrary points of view are expressed by those who are not nearly as close to the situation as is necessary to even have a fundamental understanding of the income tax area of the Master Association's operations, nor have access to our outside professionals who have advised and served us well in the past and will continue to do so. Thank you.
That is, without a question, as we've been reading the same things that you've been reading, been very concerning to us, the most concerning to us. But that's not all. There have been other aspects, and I'm going to read these because I'm not sure everybody is still here in the back and reading. First concern says that OB Sports Management salary and bonus information should be available to all residents upon request. That is confidential information. Our attorney, by statute, has said that is not information that we can share, is the reason that we have responded to them the way that we did. He goes on to say, as a contractor, OB Sports personnel information is exempt from Kiowa regulation. For those of you that don't know, it's called Kiowa, so we think of the town down south of here. Kiowa stands for Colorado Common Interest Ownership Act. It is the governing law in the state of Colorado for every HOA that they must concur to. And this is the statute which we're based upon our attorney's opinion that this is not information that we can share, and we feel obligated to protect you by not disclosing that confidential information. Then it talks about commingling of funds. It says in there, for example, writing a check on a CD, I didn't know you could do that, but writing a check on a CD representing investment of reserve funds to pay off a roofer or for annual landscaping expenses. This one really cuts to the quick. This is fraud. If we do that, this is fraud. So I'm going to ask him, it's going to be shorter this time, I'm going to ask Bob to walk us through the transfers that have occurred in the time frame of this community. So Bob, will you help me with that?
I assume we're talking about the replacement of the roof on the clubhouse and on the admin building as a result of the 2014 hailstorm. That was an insured loss. And throughout, we filed a claim, expertly managed by Gene and our broker, and that resulted in a insurance proceeds of $505,000 in December that were received largely throughout calendar year 15. And in December of 15, we signed a contract for $513,000 to have all of the roof work replaced. The $8,000 essentially representing the deductible. When those insurance checks came in, they were mistakenly deposited into the reserve fund rather than into the property fund or operating cash, but they were put in the reserve fund. And so I was not the treasurer at the time, but I did come in and put together the audit report and work with the auditor at the end of the year. I'm sorry, and so I discovered that, we talked about it, and by the time we did the audit in early 16, over $450,000 had been paid out of the reserve fund from the insurance proceeds that were put into the reserve fund to pay the roofer. We corrected it. If you go and look at the audited financial statements for 2015, there's a note that talks about the roof repair, how it was accounted for, the proceeds. You'll see a loss on the old roof. All of that is explained in a note to the financial statements. Bottom line, $513,000 to replace these roofs, all but $8,000 of which was funded from an insurance claim. The difference about the deductible was paid out of operating cash, not a dime. Not a dime was paid out of the reserve fund with respect to these replacement of these roofs.
Now, the same thing is somewhat applicable to the charge here about mingling annual landscaping costs. So the short version of that statement is?
What happened was, for years we had funded landscaping and trees and shrub replacements out of the reserve fund to the tune of approximately $50,000 a year. During the audit, our auditor brought to our attention the fact that IRS allows these to be deducted immediately because you cannot easily put a determinate life on these expenditures. If it's ordinary and necessary, no determinate life. It's an operating expense, current deduction. What we did as an audit adjustment, we removed that spend from the reserve fund, reimbursed reserve fund from operating cash, recorded that expense on the operations column in the income statement in our audited income statement. And so what that transfer you see of $62,500 every month in that table represents reimbursement to the reserve fund as a result of an accounting change.
Thank you. So, and we've got, we have an audit committee. Some of the members are in the audience this evening. And certainly they have been aware as we've walked through all of these adjustments or financial adjustments when they have been made known to us either by the auditor or by our own information that we've come to. The last thing is now the questions and answers as it relates to the new posts on the Nextdoor Heritage Eagle Band. Same fashion that we answered the questions on the clubhouse repurposing. So if you've got those questions, or if you need a piece of paper, hold up your hand so we can collect those, and we'll try to get through these questions as quickly as possible. Anybody? No questions being written out for this? Okay, so we have a couple of questions. First question.
How will voting be completed by home or by district? Please explain.
You're going to see a lot of information on this. In the past, you've had a yes, no, or abstain answer to the question of do you approve the budget. But this year, through your delegate, you're going to have to answer 4 questions. Bob went through them. But the first question says, should we do the $3 million project? Yes or no? The second question, if the answer is yes to question 1, do you approve us securing future assessments as opposed to putting a mortgage on the property? The third question, and I don't think we clearly understood it, if we, in 2017, if we bring in more money than it costs to run this place, would you approve us applying that to your next year's dues? In the simplest of language, would you approve us to decrease your operating expense in your HOA dues? It's currently $168, and would you approve us to lower that number? Yes or no? Now, all of those questions will be decided by a simple majority. If you tell us yes or no to all 3 of those questions, a simple majority is what it takes to get your answer. Then there's a 4th question, which is the same question that you've been asked every year. Do you approve the 2018 budget? And by that, you have to, according to our CC&Rs, through your delegates, you have to overturn the ratification that we would have done at the last meeting in October. There's no change to that. It has always been written into that in the simplest of terms. Now that takes 2/3 of the community to say, no, we don't approve that budget. So simple majority, questions 1, 2, and 3. 4th question, yes, no, or abstain on the budget. So we're going to be, all of that through your delegate, we're going to be presenting the budget to them on October 2nd. We're going to be presenting it to you on October 10th. We're going to get lots of information out, and you will vote through your delegate on November 8th.
Next question. When was the last restaurant inspection and how did we do?
We had an inspection from the Tri-County Health Department within, I'm sorry, I should have the exact date, but correct me, Gene, if I'm wrong, within the last 30 days. Within the last 30 days, we've had an inspection by the Tri-County Health Department, and they found no critical and no non-critical violations. The score was perfect.
And thank God, the last question. What is the payroll cost and percentage of food and beverage gross income?
Don't know the answer to that off the top of my head. We report that in that. We report the food and beverage payroll cost and the cost of goods in that summary that's put in the financial in the newsletter every single month. Okay, no other questions? Okay. We have all of our board members here. We have the president of the Traditions Sub-Association here. We have a representative of the Villages Association because their president, God bless her, is on her way to Germany right now as we speak, poor thing. So she's off on a wonderful vacation. But we want to show you with our presence that we believe 100% that we support this recommendation that we're making to you about the clubhouse repurposing. And if I can say even more strongly, that we feel that this, what you have been exposed to in the last 3 weeks, should not have happened. But my board members have said that they would like to make some closing remarks. So, who would like to go first?
For those of you who don't know me, I'm Ken Nelson. I'm my 5th year as a board member. And I've got to tell you, this group up here has been as transparent, as honest, and as thorough as anything I've been associated with. And I've got to say, I've been very, very offended because the attacks that I've got a copy here, one here, that all kinds of innuendos, insinuations, not only attacking board members, but attacking a volunteer gentleman that you listened to tonight, Bob Hochschlag, who works his ass off for this community and putting us in financial shape. thing that I really, I've got to ask all of you to think about is we asked people to come up and serve on this board. Volunteer, we don't make a nickel. We have no reason to do anything but what's good for this community and enhance our values. To make a commitment to serve you people. And yet, they get this crap in the mail, or on some way, or it's spread out by delegates, which is, I don't know why, but they send it out, and then people believe this stuff. And not in the last 2 weeks, I think to a person up here, I don't think we have been asked one question by a member of the community, what's going on? What's this about? What's that about? It's all this, what's that, Nextdoor, you know, bullshit and innuendos and little conversations here and that. And I'm sorry, I've been offended, and I would like those people to step up. Here, this thing is a good example. Let anybody read it. But it's not even signed. So I just wanted to say that, you know, I really hope that, I'm not slanting anybody, but we need good people to run for the board. And in general, it's a rewarding experience. Please consider it.
I'm not here to say anything about the other stuff. I am so happy that you showed up to support us, and that I hope you're as excited about this project as I am, and you can do that by applauding right now.
I just wanted to say that I'm Larry Place, in case you don't know, I'm Secretary of the Board.
You're hidden as usual.
Secretary of the Board, and I just want to thank Gene and OB Sports for an absolute tremendous job over the last 4.5 years, turning this community around. It was awful back in 2010, 11, and 12, for those of you who lived here. And they have done such a wonderful job, and they are getting smeared in the press and the public innuendos, and they do not deserve it. They are upfront, honest, and hardworking people, and they deserve our support. And if you get a chance, stop by his office and tell him that.
I'm Jan Heffernan, and I'm a director on the board. And I wanted to say 3 things. One, I'm offended personally by the accusations, and you haven't seen everything we get about the board. And I take that personally. Secondly, I'm offended on behalf of the board, because we are all good people that work hard, and I think a lot of you people know at least 1 or 2 of us, and you know who we are. And to be accused of these kind of things is offensive. The third thing is I'm offended for the community, because we don't deserve this. And we should be going forward, and we're looking forward very much for the repurposing project. We're just really excited about that. And so it's hard for me to understand why someone wants to harm our community. I don't get it. And that's what's happening. People outside of our community know about this because things are going everywhere. And that's going to hurt us. It hurts our values. It hurts who we are. So I think we need to stop this and go forward.
Hi, I'm Phil Chiporis, and I'm a director on the board too. And I just want to say that, you know, I truly believe in the mission and vision statement that we came up with. I was part of the group way back when that put that together. And I believe in that. I believe that I want to maintain our values. I want to improve this community. I want to make the best that we can. And I believe everyone on this board feels the same way. And when I get these emails, I'm just wondering, what do they want? What is it that they're trying to accomplish? You know, what is their end game? I love this community. I want to be part of this community for as long as I can possibly be. And I just don't see the way to make this community better is to tear it down. I think there's enough great people in this community, we can make it the best place to live.
Hi, I'm Donna Maciano, and I'm the newest member of the board. And when I joined the board, I didn't realize how negative some of the people that live here are. And it's really a shame. We work very hard, we put in many hours, and some of the information that we get is just appalling. And I just want to say that I love living here. The repurposing is going to be wonderful for our community. We had great focus groups. We took many of the ideas that we put together. Gene and his staff do a phenomenal job, and I really would appreciate that we can all be positive. Thank you.
So I do think, I really think that OB Sports, and most particularly Gene and Wendy, you know, if you look at what we've been talking about in this last half, is that we're being criticized for being successful. I mean, there's people in this room, Cynthia and I moved here in 2010. So it's not so much us. We went through that special assessment and those kinds of things. But many of you have, I mean, we've gotten so close to the edge. And if you look at the $168 a month that we say to you, we'll probably ask you to lower that, has not moved an inch since OB Sports has gotten here. So they have been able to generate this success at exactly the same price that was here when they got here. The former company didn't do that. And so I would ask you to really look deep inside of yourself. Can we be better in the restaurant? Can we be better on the golf course? Can we be better at the front gate? Of course we can. But I'm here to tell you that this management company that we're blessed to have, you find me a better one that's existing, because I'm here to tell you what's also happening. We have other communities in this area that are calling OB Sports and say, can you do for us what you've been able to do for Heritage Eagle Bend? And yet, the accusations and I love this term called keyboard courage that has come up in here. And so, let's close on a positive note. Thank you so much for all of your support, because you have made this place what it is. We want your support going forward, and we appreciate you. So good night.